I suppose the market in South Africa only had a few hours to take a look at that ECB decision and look at what that meant for markets going forward. But what stood out is them keeping that deposit rate or moving that deposit rate to 0%. And that's seen as trying to get banks once again lending to each other in the interbank market and getting banks lending to the real economy. But overall, your thoughts on what came out of the ECB?
Well, it's all about throwing money at the problem at the moment. It's trying to get liquidity going. The biggest fear is a liquidity freeze, or a crunch, basically. It's something that we saw in 2008 with American banks. The likelihood of this happening in Europe has to be prevented at all costs, and that's exactly what's happened. We've seen a reduction in interest rates across the board. And obviously the idea is specifically between banks is for them to start lending to each other. Because at the moment, banks are borrowing from the ECB at almost next to nothing now, but banks still aren't really lending to each other. There's not distrust. It's just a matter of the current situation is very dire at the moment. And to make it a little bit easier now to incentivize banks to say, look, guys, it's not going to cost you anything. Just lend to each other. It's something that was bound to happen. But it's a little bit frightening to see that they've actually gone down to zero now. I mean, there's not much more that they can do at the moment.
Exactly.
The interest rate now is 0.75. I mean, they could reduce that down a little bit more, but if they've run out of ammo, what else do they do? So it's a very difficult situation. I think it's not upsetting markets, but it's putting markets more on edge, and that's why we've seen a little bit of jitters in Europe. And look, our markets took off immediately with that news. Reduction in interest rates in Europe, reduction in interest rates in China, and easing again from the Bank of England. But when it was digested, we've actually seen that the reason why we are seeing this is because of the current negative situation, that this is the reaction to stimulate the economies further, which means the economies must be in a dire situation. So reality sets in.
That's how the markets are.
The reason why
just
this is happening.
Buy the rumor this week and then sell on the news as
That's
always.
exactly right. So the situation is quite bad, and this is the reaction to it. That's the reality at the moment.
Yeah, that's what we're seeing playing out in America and Europe right now, with those markets trading into negative territory. But it is an important 2 days, in fact, for the markets, because you've got that non-farm payrolls data tomorrow coming out from the States. That's the June report in terms of employment figures and whether the US economy is employing more people. Expectation is for 90,000 jobs to be added. I suppose it's once again, the market, if it comes in higher than this or below this, we are going to get a reaction.
Correct. The market has just been reacting to any news flow that's out. It's been a schizophrenic market, and it's been like this for quite some time. So great data comes out, markets go up. Slightly negative data comes out, market goes down. It's very important to look at that American job data, because we've had some very positive data recently, but a little while ago, but recently that data has been a little bit softer. And it's showing that the American recovery that we saw late last year into early this year is starting to slow down, and that's really coming through in the job data. So it's a very important number. I think the market's going to look at that. I think it comes out about 3:30 South African time. So we're all going to be, eyes glued to the TV screens to see what's happening.
Wait and see approach
exactly.
until that, as we go into the weekend. Focusing in on South Africa, we've got a new trading system right now, and some saying it's a little sticky and a little tough to get used to. What is the sense from your side? Is this a system that is going to be 400 times faster and make trading on the JSE that much more efficient?
Well, I don't want to comment too much. I mean, it's not easy to introduce a whole new system. There are a lot of IT issues to get over, and there have been a few issues here and there. But it's something that had to happen, it needed to happen, and I'm sure everybody's working and trying their best to make sure it runs smoothly. But there have been a few hiccups from all sides, the JSE as well as the other service providers. But essentially from a broker's perspective, or at least from my perspective, there isn't really much change. It all looks the same. I just presume from an institutional perspective, it's probably a little bit faster.
Yeah, and
as long as it works, I'm happy.
I suppose anything new is a little tough to get used to at first.
Absolutely.
Let's talk about Vodacom today, because
new CEO,
new CEO there, Peter Ace, leaving in March 2013, and Shamil Jusub is the CEO of Vodafone Spain.
Yes,
coming
exactly.
In.
So I'm not going to comment on that. Obviously, it's sad to see that other CEO leave, unfortunately. But I mean, these things happen. But it's been no effect on the share price at all. I mean, the share price is basically unchanged currently.
Do we need to speculate as to why Vodafone is bringing in someone from an international space right now? And there could be some plans, I suppose, for Vodafone and Vodacom in Africa, Vodafone in Africa. Would that be something that you might be thinking?
Vodafone owns about 65% of Vodacom, so to have one of their own being in South Africa makes a bit of sense. At the moment, I don't foresee any major move up into Africa currently. However, this could change. I think for Vodacom's a bit of a cash cow at the moment. It's pretty developed in the markets that it's in at the moment. It's paying out a large amount of dividend, which is good for Vodafone as well as South African shareholders of Vodacom. So I just think it's having one of their own running the ship at the moment, which is quite important for them.
And of course, perhaps Peter Ace wants to move on. He's been at the company
since
for 20
1994
years.
or 5, yeah. So
Yeah.
it's been since really the beginning. So I think he's done an excellent job, and time to move on to better and greater things.
You wonder where he's going to move, but that's a debate for another day. Let's move on to some of the other stocks. BHP standing out on the top 40 today, falling back 0.6%, perhaps bringing down that resources sector. Resi 10 slightly there. Talk of them actually taking legal action against strikers in Australia, and that's really an interesting one. They said they lost $7 million as a result of this 4-hour strike.
You don't see that happening in South Africa, especially with the platinum miners that are losing an absolute fortune due to these kind of actions. So it's an interesting point. I mean, I don't think the share price really reacted on that. It's interesting to see that Billiton and Anglo's is still under quite a lot of pressure at the moment. Kumba and Exxaro had excellent days that I picked up on. So it's ironic that your local miners, on the bulk commodity side doing very well, but your international diversified miners still under some pressure.
Is that just foreigners then trading those shares?
I would say it's because it's more internationally focused in the sense that international investors are more aware of these two shares. They are listed on various stock exchanges. They're on the front line. Again, if you're worried about world growth and so on, they get hit first. Whereas Kumba and Exxaro tend to fly a little bit under the radar. They are specifically dealing in one commodity or a couple of commodities, and therefore have a slightly lower risk profile. Which is ironic because sometimes you're a bit concerned about the South African political situation and nationalisation of mines and higher tax rates on local mines. So you would think there might be a flow more into Billiton. But it's just not happening at the moment. Exxaro and Kumba still doing incredibly well at Billiton and Anglo's.
Would you then be buying those stocks, buying into this trend right now, or continuing to pick up the cheap, diversified global miners?
Look, I think it's important to maybe have one of the diversified miners in your portfolio, but I've always been bull on Exxaro and Kumba for many, many years, and the trend's your friend, and they just keep on going up. And there's very good stories behind both of them, in my opinion, why they are at those kind of levels. So I think it was, Kumba back up to almost 580, and Exxaro back up above 200 Rand a share. So very, very interesting to see the strength there, and I think you need to sit tight with the trend. If it's not working on Anglo's and Billiton, it's good to go into the ones that are.
Well, there we go. The trend's your friend. That's exactly your advice for Thursday. Nicholas Sorour, portfolio manager at Sasfin Securities.